All right, guys, what is going on? Welcome to the live stream. Excuse me. It is Wall Street. Ooh, excuse me. It is Wall Street Wednesday. And I hope you guys are ready. Thank you, Eric. Appreciate that. Appreciate that. Wild weather we've been having. Cold to hot, cold to hot. You know. Kind of like the indices the last 2 weeks. Cold and hot, cold and hot. Know what I mean? But I would tell you though, it's 62. It's getting ready to be about 65. I may take the roof off again today. I'll think about it. What's good, Torty, Eric, Marshall, AJ, Capitalist, Slowly, Kieran, and Robert. What is good? I came across a very interesting YouTube video a few minutes ago. And this guy spoke about YouTube. And he said the algorithm is different. The algorithm has changed. Not the price delivery algorithm, but that'll never change. But the YouTube algorithm. And about 40 minutes ago, I posted on my own social media. I posted on Instagram. And I said, as a creator, have you noticed a drop or a rise in your views in the last 2 to 3 months? Now, I don't have that many votes. I don't have that many votes right now, but right now, 75% said lower views, 25% said higher views. So, do you guys in the last, I'd say 30 to 90 days, have you guys seen a rise or a drop on your social media? If you're not a creator, I guess I wouldn't really worry about it. But as a creator, that's something that I've noticed. So, and that's across the board. Your videos have been coming up on my YouTube as YouTube featured. What is YouTube featured? You know what? I'm glad you brought that up though for the homepage. The homepage, I just noticed this because I saw it in the video. I didn't notice it at first, like on my own, because I wasn't really paying attention to this. But on your homepage, instead of having a wall of long form content, now in the last few months, it was like 2 rows of 5 long form and then a row of shorts. Now it's 1 row of 3 long form and then all shorts. So like less videos are being shown. Less long form content is being shown unless you really scroll the YouTube homepage. Dude, that is bullshit, man. And yeah, YouTube featured, I don't even know what that is, bro. I don't see that anywhere. But thanks. Thanks for letting me know. I don't want shorts on my YouTube page. Yeah, me neither. 9 times out of 10, I don't. But that's where this is the world we live in, bro. This is where social media has gotten. The brain rot is real. They're trying to attack your short-term your attention span, basically. That's what they're trying to do. Okay. I don't know if it's a corporate thing. They're trying to manufacture views to for their quarterly reports to say, hey, YouTube is still growing, even though it's like really not. They're trying to twist data and manipulate things to make it look better. You know what I mean? Like, so I thought about doing that, right? For the 48 laws of trading. I could have made each law its own video. So instead of getting one view for watching a 48, or sorry, instead of getting one view for watching a 2-hour video, if you only watch it one time, I would get 48 views, because you would have to watch the first one and then another video for the second one and another video for the third, and so on and so forth. That is manufacturing views, because it's the same person, right? Just watching a different video. So technically it's a different view, but I didn't want to do that. I wanted to make it one seamless, really long form video. I did not want to boost views, because I don't know. It's just unethical to me. I think it's bullshit. I don't like stuff like that. So I'm not going to do it. But just know I could have done that. Was good, Oscar. And H, what up, what up? I don't even think y'all answered my question. That's crazy. But okay. Anyway, I can't remember if I mentioned this yesterday or not. If I failed to mention it, then that's 100% on me. But I will tell you, Thursday the 11th and Friday the 12th of December have this gap here. So we did, I mean, we had that there. We left that open for a while. We traded into that on the 7th, a week ago, about a week ago. All right. The 12th, 2 days ago, that Monday, we traded above that high further into this gap. Here, let me do this. I'll do it like that so we can see the parameters a little bit easier. Okay. We traded more into that on Monday. And then yesterday, we traded roughly like halfway. See what I'm saying? I think it was in the market review last night. I was saying, like, what did I get wrong? What did I miss? And the idea that I'm not perfect and that I'll get it wrong sometimes too. All right. I always have to toss that out there. But the halfway point, if you can see that, the midpoint right there, like 26,034 and a half. Okay. Give or take is about right there. Okay. See that? So that's all we did. No fancy equations and all that stuff. It's just the gap. There it is. Halfway. And that's where it's at. So when we drop down to a smaller time frame, right? And excuse me, this is a really good example. And again, I got caught up in this. And a lot of Twitter did too. I goobered with the Twitters yesterday. So that's, I'm not going to make a habit of doing that. But what did a lot of people miss? Well, the map is not the territory, right? A lot of us looked at those highs. A lot of us looked at like, oh, these lows are being swept to run up to that, as well as to the 124s. I even mentioned that in Discord, I think right at Equities Open, right? So what we missed, and again, this is my opinion, but what I missed was that, yeah, we have small time frame highs, but we are at a higher time frame gap. So what would have needed to take place is for us to push beyond the midpoint and then through the upper end of the gap and then to the 124s. So there was a lot of things that the market would have needed to do in order to get to that 123, 124. Does that make sense? So does that give you a little bit more context? Does that give you a little bit more understanding to see what we're doing today? Does that make sense? Because if you go to it, if we go back to the daily, and that's why I had the daily up here when we started, so you could look at it, because look at yesterday's candle, right? The 13th, yesterday. Look at that daily candle and its closure in relevance to that information that I just gave you. The fact that we have this gap, the fact that we have the midpoint, and Tuesday took out Monday's high, right? So we took out the previous day's high, left some high, very small time frame highs, right? But near the midpoint of that gap, but we closed lower. So are you surprised that today, Wednesday, we opened, right, yesterday at 5 o'clock, traded higher to some degree, and today is a rip ass, right? That's my question. Are you surprised? Are you surprised? The Ripperoni in London on an hourly, 7 o'clock, back into this imbalance. 8:30 is somewhere in here. Equities dumps us lower for all of these lows in here. Okay, this is not a trend line. I'm just trying to point out all of these consecutively higher lows. Okay, not a trend line. Not a trend line. I'm just not going to mark out that low and then this lower one and this lower one and then this lower one. Okay, as a visual, I'm trying to tell you all of these lows, right, consecutively higher. That is what I'm referring to. So reversal here, bamboozled, right? I thought, a lot of people thought we were gonna go higher. No, we're gonna go lower instead. And we did get that lower low on the day, by the way. Remember I told you if we are gonna go up there, we're definitely gonna hit a lower low first. We're gonna take out that low first. See that shit? 230, right at 230. Right? Random fucking time. Random fucking time, chat. Boozled is with a Z, not a S, slowly. But that's okay. We're sellers, not spellers. I get it. That's the real reason why it's taking me so long to write this next book. I keep misspelling shit. That's what it is. Don't tell anybody. 215 to 245 is the final hour macro. One of them. Right? And that just so happens to take out the low that I told you was likely to get taken out. Time, price, and context. You remember that up candle I told you I was watching? I was like, I'm not going to trade it. I'm not interested in it. But you remember that candle I pointed out to you? Fucking magical. Magical. Ain't that some shit? Well, yeah, John, you pointed out that low and you pointed out that up candle right there. Bang. Subscribe for more supply and demand content. Okay, John, don't be an asshole. Don't be an asshole, John. Only because you asked politely. Whoops. Okay, so anyway, with all that stuff out of the way, that ended up being the high, obviously, intermediate term high. And then, yeah, the continued weakness, right? Stocks fall faster than they rise. Yeah, look at that shit. The law of speed, right? The law of speed, baby. Good job, Oscar. I wasn't up at 9 a.m., so I don't know. ES higher time frame high wiped told me everything I needed to see. Oh, that's true too. That is true too, Cameron, because at the same time, and that's probably what I missed too. I really should have paid more attention. Don't multitask. All right. I do it. And that's why I'm telling you not to. So it's not a hypocritical thing. It's like, look, if you do decide to multitask, yeah, you'll get more done, but you'll make more mistakes too. So, you know, that's the trade, pun intended. With ES making all-time highs on Tuesday at the same time that Tuesday NQ could not reach beyond its gap. Yeah, that should have given us more information too. That should have done it too. The hourly set 3 consecutive all-time highs, closing up there, then a fourth and final wick. Yep. I see your point. With those three and then that wickage here. That makes sense. That's almost like a... This is not a soup. This is not a soup. That is. A... Okay. There we go. A... higher high above an old high, which is also all-time highs. And it wicks that too. Again, at the same time, even though NQ was higher in that respect to the wicks, right? Higher here in the short term, higher here in the short term. But you're right, that longer term perspective left those highs up here, couldn't reach it. That's weakness. So on the day it was like strong, but on the overall larger time frame it was weak. And that's why the map is not the territory. So this is why I'm telling you guys, I will get it wrong sometimes, and so will you. It's a lot to keep up with. Right? Sometimes, like the ladies, right? You're a lot to keep up with. All right, okay. There's a lot of rules, there's a lot of things going on. Okay? It ain't easy. Like your mom. Haven't traded final hour in a minute. Dude, the final hour has 4 macros in it. The final hour is damn near its own session. Final hour is goated. Plenty of opportunities in there. That's why I made that video, final hour finesse. Long time ago. That's an old video. Thank you, AJ, for posting the laws. Law number 6. If that's accurate. I don't know off the top of my head. Are you still overall leaning towards the buy model? Yes. But I told you I would stick with that until proven wrong. So we were, and again, this is like a very, very zoomed out hourly time frame. This is the original consolidation, right? Got into it, left it. But this ends up being our discount. Remember that Friday buying below old lows? You don't remember that. Then we traded higher, made a new high, and then this to me should have been our second leg lower. But again, this is why we review what actually has taken place and things that maybe I have missed or maybe that you have missed. Because if we were looking at ES making all-time highs and NQ not doing that, either one of two things would have happened. Most likely. You would have said, okay, NQ needs to play catch up to go higher, or you'd say, well, the higher time frame might be weaker, so we may not trade today. We may just wait for the daily candle to close and then see. So if you waited for that candle to close, you'd have been like, oh shit, well, we just closed off of that gap. We have some lows that may want to reach for, and then London is what really did the damage, and then equities was a continuation of London for those lows. So it is not the second leg anymore. You see what I'm saying? That was the first one here, and then this retracement to go higher, that should be the second one. If you remember the last like 2 weeks, I was saying if this is our second leg, we should be bullish. And in a general sense, we sort of were. There were opportunities to long, but then the fact we couldn't get past that gap, higher time frame divergence here, then it's like, okay, rip ass. But still, in the broader sense, in the longer term, still, I don't think the markets are going to crash. I still think we are going to get up here eventually. We just left small time frame highs on this high, and we have highs at this high as well. So now we have two sets of highs. You see what I'm saying? Like, this is a set of highs by itself, right? But those sets of highs, there's a set of highs there and a set of highs here. So I think it's just building liquidity to run it later. When is that? I don't know. The longer in time, so less accurate for me. It's too much going on. There could be earnings, there could be seasonality, there's some shit going on with the Federal Reserve right now. I think Trump is, or it may not have been Trump, I guess, but it was somebody, the DOJ is opening an investigation into Powell or something. Like, I don't know much about it, but you know, there's too many fundamental factors, interest rate factors, right? Stuff like that go into those longer term, you know, targets. I can't be specific. You know, I'm not going to tell you, oh yeah, you know, we should hit this high by October 7th, between October 7th and November 1st. Like, I'm not doing that. I'm not doing that. Okay, Tio. Makes sense. But anyways, what else you got? We have a divergence at the low of the day too. I don't know. This oh my heavens, dude. Look, I usually don't call price action bad, okay? I usually don't call price action bad. But Dow Jones, bro. What on earth is this? What is this? Like, that's worse than watching a scary movie when you're a kid, you know? Like when I'm 5 years old, 6 years old, watching Alien vs. Predator, you know? It's like 1 a.m., the lights are out, you know? Scared out of my fucking mind. Like, today's Dow is worse than that. Like, that just gives me the heebie-jeebies. Look how long it took to take the previous day's low. Terrible. Yeah. thought I had a sneeze. I do not. Yeah, so days like today, man, I don't know what to do with this. I don't know what to tell you. Yes, it did leave behind some clean highs here and equities high, which is cool. You have these lows here too. So this is just junk to me. This is just junk. We're below some old lows. I mean, we're pretty much in a discount overall. We are. But just because you're in a discount doesn't mean price is just going to turn on a dime when you expect it or where you expect it. You know what I mean? Like, we're back in this mitigation again, but this is like the third time because we had hit that mitigation here and here twice. Now that we're here a third time, to me, the more times we hit a concept, the less likely it is to hold. That's just my opinion. You know what I mean? So it's like they're manufacturing a low, sweep it. Manufacturing a low, sweep it. Whatever this shit is. Create some lows, rally a little bit, dump it. So they're just creating lows to then take them and then take them and then take. So again, I say this all the time, but today seems like one of those days they're trying to get people to long and they're getting stopped out or break even. And that's frustrating. This is what that looks like. You know, short-term low, couldn't get past this up candle up here. Rip ass. We rally into this imbalance. We leave a sliver of the upper end open, run it lower. And then consolidation. And like I said, these lows here, it's like people may start thinking the market has made a low. Build that liquidity there, take that too. You guys can see that though, right? Like without having me explain it to you. Like if smart money's short already and they generate a low, then smart money covers below that low. Market rallies, liquidity builds here, smart money exits below old lows. And then the bearishness continues, smart money is going to exit below these lows. That's what it's looking like. Days like this are trash to long. Usually. So I know it's late already. I mean, a PM session. We only have about 2.5 hours left, a little less than 2.5 hours on the day. So me personally, I'm probably not going to trade this. I'm probably going to work more on my book because I really need to get this done. And one day I'll probably make a video on it. It'll be after its release. So that way I can actually show you what I have so you don't get to read it before it comes out. But I'm going to make a video and show you all this stuff. I'm going to show you all the printed pages, the type stuff, the edits and the annotations if I decide to keep them. The sources, the quotes, the references. Dude, it is so much. It is too freaking much. See, NQ's already making a new low of day. I mean, it may offer a scalp later with these highs here. It's possible, but it's definitely not a swing. I could probably say that. So there's like the final hour. So yeah, days like this are absolutely trash to me. Now, if we are able to do something where we set a low, and again, I don't know what it's going to be. Okay, I'm not trying to do that today. There's Friday and Sunday gap from somewhere. What is that? The 2nd and the 4th, right? So we're back into that. that could set a low to go higher. I'm not saying it will. I don't know. I'm not trying to predict today. We have a longer term low down here too. So on a smaller time frame, like I'd be interested if price were to leave this here as a consolidation, right? Go below that Sunday gap, go back into it, then take out that old low, and then the final hour do some shit like that. So it probably won't do that at all. But I'm just saying, the only way that I would be interested in today is if we were to do something like that, right? Give us a nice buy model, give us a nice, you know, some sort of short covering in the final hour to like push us above these highs. You know, keep the market dumping lower to get whoever is short that's just holding and holding and holding, get them to put their stops here, build a bunch of stops there, drag it lower, right? Take price lower, knock out that old low, and then run it higher. If it does not do something like that or similar, like if it just drifts back up here and then trades above those highs, throw the whole market away, dude. Throw it away. Like a cold dinner. Just toss that shit out. Anything other than that I have no interest in. What page are you on in Book of the Month? I don't know. I don't know. I am on page, I think, yeah, I'm on page 202. What's today? Wednesday? I'll be further by Friday. I'll be a lot further by Friday. Not a lot further, but I'll have more to say about it on Friday. What page are you on, Oscar? What page are you on? But remember, don't compare yourself to me. I started reading this like, I don't know, early December or late November. So I also read a lot more books probably than all of you, but I started this one earlier than you did. So I have that advantage over you. That's why it's not a good comparison. Do you have a stream or anything that explains the final hour? I'm in process of working through your starter pack, but have not come across anything yet. All right. I'll do this and then we can end it. Since you're new, and most of you probably need a refresher anyway. The final hour has 4 macros. It has 4 macros. I probably won't go over gold. The first one is 150 to 210. Okay. 150 to 210. Actually, you know what? I'm going to go ahead and clip this and make it its own standalone too. I don't want to keep doing this shit. Okay. The final hour has 4 macros. Okay. 4 macros. The first one is 150 to 210. Now, I am Central Time. So if you're Eastern, you're going to add an hour. If you're somewhere else, you're going to have to do some time zone conversion here. Okay? But the first one is 150 to 2. Ooh. We'll do that. Okay? 150 to 210. That is your classic 20-minute macro. Okay. Every hour comes with that. Every hour comes with that. Which means not the second one, but another one would be 250 to 310. Okay. 150 to 210, 250 to 310. That's two of them. 150 to 210 is the first one. The one after that would be 215 to 245. That is the only macro that I know of that is outside the scope of 20 minutes. Okay? $215 to $245. It's a 30-minute macro right around the middle of that hour. The third macro, meaning the third one in the order of time, is called the MOC, which is the last 10 minutes of equities, which is 250 to 3. You see that? We'll do top center so we can differentiate a little bit. And we'll make this one a different color as well. You see that? Okay. Drop some ones in the chat if you guys are with me so far. What does the macro stand for? That's not an acronym. But what it is short-term scripts that the market runs on. That's why the markets, a lot of the time, not every macro is going to be important, in my opinion, but that's why every time you see, when I'm like, oh, fucking random, or, you know, I expect this in a final hour, that's because of what I'm waiting for. The market runs on scripts, okay? That's why it's not supply and demand. It runs on a script. Doesn't matter what volume says. And I know, again, I already know this. That steps on a lot of people's toes and it offends a lot of people. But if you backtest this, just show me that I'm wrong. Just show me. Show me with a fucking chart, okay? Just show me. I show y'all every week. Every week. I show you stuff, right? I can always add in my own opinion. Well, I think this, I think that, right? But nobody can argue with price. What has printed has been printed. You feel me? These candlesticks, right? Commerce is taking place. There are transactions taking place. Whenever the market runs on these scripts, these macros, MOC stands for market on close. You can actually look that up. But the market, when I tell you guys from time to time that the market will reference levels of liquidity as it relates to time, okay, there are reference points in price that the market will refer back to. The algorithm will refer back to. And then it will seek that liquidity in that time window. Okay? So for example, and this is why we went over this a little bit earlier. When I need an indicator that does this shit because I can't keep doing this. I mean, I care for you guys, but like, God, doing this over and over again is getting ridiculous. Okay, so right there is 150 to 210. Okay, we'll go ahead and mark 215 to 245. We're going to mark that with a different color. We're also going to mark 250 to 310, as well as the MOC, which is 250 to 3. Okay, and we'll make that like, we'll do that. Okay, so remember, because this is all in the recordings, or if it's in your notes too, remember what I said yesterday. If the market is going to go like way up there, whatever we talked about, I said it's probably going to make a new low of day. It's probably going to hit that low, right? Remember I told you that? And I also told you about this up candle right, I think it was in here, right at the end, the tail end of the stream. I said, hey, I'm going to watch this. I'm not interested in it, but I'm going to watch it, right? Remember I told you that? And look what happened yesterday. This macro, the 2 o'clock macro, okay? That's the time window right there. This is our 215 to 245, right? That's our MOC. And that is our 3 o'clock, right? So what took place? We ran up into that up candle and then lower in that macro. Then the 215 to 245, that took us bang right down to the low. Okay, we rallied off of that. We have this short-term high here and these highs up here that are inside the range. We rallied, and then guess what? 250. Look at that spike right there. Okay, look at all these fucking candles. Okay, look at all these candles here. And then look at the 250 one. The 250 one just fucking randomly has a larger range, right? Randomly. All the buyers and sellers came in. No. Well, the MOC, that's possibly a different story. I guess. Because it is the market on close. But right then, the 250 time, we get volatility. We trade below the MOP, the MOP, the macro opening price. Okay, right there. Higher retracement, higher retracement, higher retracement, higher into the close. And then volatility fades off. That's a script. That's a script. That's a script. That is a script. That's why I keep telling you all the tools that people use. I don't need any tools. You are the tool. What do you mean? Time, price, context is the tool. How can it not be? Think about that. How can it fucking not be when I told you about that up candle and I told you about that low? And we hit that up candle in that same time window here. We hit the low in that time window, and then we ran for liquidity in that time window. Tell me this isn't fucking scripted. It's a script. It's a play. Read the lines, and then you'll know it. I don't always get it right, dog. I'll miss it. I'll mistime it. I'll get the bias wrong or whatever. Okay? But you go back into history because you have the data now. You know the 4 macros. The 2 are normal 220-minute ones. Those are 2 of them. The only 30-minute macro, again, that I know of, 215 to 245. And the second or the first half of the last macro is its own, the MOC. See what I'm saying? So you have the 4 time windows in the final hour. Every fucking day. Every day. Every day has a final hour. Market doesn't take a day off. You take a day off. I take a day off. Market doesn't. I don't think every final hour is worth trading. But Again, take this same data I just gave you. Go print those 4 time windows, right? Go print those every day. Go print them every day. The final hour of, let's see, that was yesterday, Tuesday. So go look at the final hour of Monday. Go look at the final hour of last Friday, last Thursday, last one. You see what I'm saying? And tell me this shit ain't scripted. I'll take final hour trades if, like with what I just told. See, motherfucker, dude. See, now that we did that, I'm not interested in it anymore. Okay? We weren't supposed to do that. So, but we did. So you know what that means? No trade for me then. And it's that simple. No trade for me. I would have been interested in that if we left that open, did what I told you, and then the final hour could set us up for longs because it's going to run on those scripts. Like the 215 macro, it's going to trade below its open to go higher. MOC is going to flash below its low to run higher. The MOC, if you actually, because most of you probably don't do this, but if you actually watch the MOC, you will see the volatility. You don't see, this is becoming like a very long clip. Right now, you're going to see price levels that may not skip all that much, okay? It'll skip a couple ticks, you know, it'll do this or do that, a couple points. The MOC, the final 10 minutes in here, is an environment where price won't move, but you'll see a wick print. That's why I said flash. It'll be faster than TradingView can actually mark it up. It'll just, one moment, it'll be doing what you see it doing now. And within the next couple seconds, you'll see that. And it never moves from up here. It never moved at all. But it just all of a sudden prints a wick like that. And it'll do some shit like that into an imbalance or below a low or something. Not every day, but again, it'll usually do that. So now you know the 4 macros are 2 normal 20-minute ones, the 215 to 245, and the MOC, which is the first half of the last macro anyway. Okay? I haven't traded the AM session in the last, I don't know, few weeks or so because I've been sleeping in. So I do like PM session. I do like final hour too. But hopefully that gives you guys enough information to work with. Okay? If you think I'm wrong, prove it. Prove it. And I'm not just saying like, oh, well, there's going to be a couple days here and there where the macros didn't do anything or the final hour didn't do anything. Yeah, you're going to have days like that. But there's a lot of the times, I'm telling you, okay, you can't hide. You can't hide. The market cannot hide, bro. I told you about all these. I didn't tell you about these highs being ran, but I did tell you we should take out that low to go higher. And that's exactly what we did. We hit that up candle that I told you about. We hit the low that I told you about. And we got a reversal that I told you about. All in advance. All in advance. How could I do that? How could I do that if this is all random? If I'm not looking at any tools, I don't know how many orders are up here. I don't know how many orders are down here. I don't know how many orders are at this high or above those highs. I have no fucking idea. Who knows? But yet price still does the things that we teach here, the things that I teach here. So explain that, because I don't fucking understand. All I see is time, price, and context, and the market obeys. Why would I need any tools? Would you recommend someone who wants to trade just for an hour and just focus on the end of on the final hour? I mean, I guess if you had to, you could. If that's your only option, I guess. But just know that if you're going to trade the final hour, you're probably going to trade a lot of scalps. So, and I would also argue that you're depending the RR may not be like 1.3, 1.4. It might be a little bit lower. It might be 1 to 2s depending. So, if you were forced to, then I guess so. So, anyways, I was gonna end it early today, but I guess I talked too much as per usual. So we'll go ahead and end it with that. All right, y'all be good, be blessed. This is the last free live stream of the week, which means Thursday all the SMS members will get a market review, and then Friday I'm doing a member only live stream, and then I'll also be dropping the companion essay for how to read a book by Adler and Van Doren. So if you're behind, catch up. If you're ahead, keep going. But that's all I got. All right. So for the non-members, I'll see you guys on Monday. Have a good weekend. For all the members here, I'll see you on Friday.